Course 3, Executive Influence and Strategic Partnering. Topic 1, Executive Communication. Executive communication is the ability of senior leaders to communicate ideas, financial insights, strategic priorities, and organizational decisions with clarity, credibility, influence, and impact across diverse stakeholder groups. For modern chief financial officers, CFOs, communication has evolved from presenting financial reports to becoming a strategic leadership capability that enables collaboration, drives organizational transformation, influences executive decision-making, and strengthens stakeholder confidence. Leading executive CFO programs emphasize that finance leaders must communicate as business strategists who translate complex financial information into actionable business insights that support enterprise value creation. The role of the CFO has expanded significantly over the past decade. While technical expertise in accounting, finance, and risk management remains essential, executive effectiveness increasingly depends on the ability to communicate strategy, influence cross-functional leaders, engage investors, support board governance, and lead organizational change. As finance becomes a strategic partner to the CEO and executive committee, communication skills have become equally important as analytical capabilities in creating organizational impact. Executive communication begins with strategic clarity. Senior leaders must articulate organizational vision, strategic objectives, investment priorities, risks, and performance expectations in language that aligns stakeholders around common goals. Effective communication transforms financial data into compelling business narratives that explain not only what happened, but why it happened, what it means for the organization, and what actions should follow. CFOs who connect financial performance with business strategy enable better decision-making throughout the enterprise. A fundamental principle of executive communication is audience adaptation. Different stakeholders require different communication approaches depending on their responsibilities and information needs. Boards of directors focus on governance, enterprise value, strategic risks, and long-term performance. Investors seek transparency regarding growth prospects, capital allocation, profitability, and financial sustainability. Business unit leaders require operational insights and investment guidance, while employees need clarity regarding organizational priorities and transformation initiatives. Successful finance leaders tailor communication style, level of detail, and messaging to maximize understanding and engagement across these diverse audiences. Data storytelling has become a critical executive communication capability. Organizations generate enormous volumes of financial and operational data, yet leadership decisions depend on converting information into meaningful insight. CFOs increasingly use dashboards, visual analytics, performance scorecards, scenario analysis, and business intelligence tools to present financial information clearly and support strategic discussions. Effective storytelling combines quantitative evidence with qualitative context, helping executives understand trends, risks, opportunities, and strategic implications rather than simply reviewing numerical results. Executive communication also plays a central role in strategic partnering. Modern CFOs collaborate closely with CEOs, Chief Operating Officers, Chief Information Officers, Chief Marketing Officers, and business unit leaders on strategy development, digital transformation, mergers and acquisitions, capital investment, and organizational change. Influence in these discussions depends less on formal authority than on credibility, analytical insight, active listening, negotiation skills, and the ability to build consensus across diverse functional perspectives. Communication becomes especially important during periods of business transformation and uncertainty. Digital transformation, restructuring, acquisitions, market disruption, geopolitical events, and economic volatility often create organizational ambiguity and stakeholder concerns. Finance leaders must communicate change with transparency, consistency, and confidence while providing realistic expectations regarding risks, opportunities, financial performance, and implementation progress. Clear executive communication strengthens trust, reduces resistance to change, and improves organizational alignment. Another important dimension is board communication and corporate governance. CFOs regularly present financial performance, strategic initiatives, investment proposals, enterprise risks, and regulatory developments to boards of directors and audit committees. Board-level communication requires concise analysis, strategic perspective, objective judgment, and the ability to explain complex financial issues in language that supports governance and informed decision-making. Strong communication enhances board oversight while strengthening management credibility. Executive communication also supports investor relations and capital markets engagement. Public companies rely on transparent communication regarding financial performance, growth strategy, capital allocation, ESG initiatives, and long-term value creation to maintain investor confidence and market credibility. CFOs increasingly participate in earnings calls, investor presentations, analyst meetings, and stakeholder engagement activities that shape market perceptions of organizational performance and future prospects. Digital technologies have transformed executive communication through real-time dashboards, artificial intelligence, collaborative platforms, enterprise analytics, virtual meetings, and integrated reporting systems. Finance leaders increasingly communicate through digital channels that enable faster decision-making, greater transparency, and broader organizational engagement while supporting data-driven strategic discussions across geographically distributed teams. Effective executive communication is supported by several core competencies: strategic thinking, active listening, emotional intelligence, negotiation, conflict resolution, storytelling, presentation skills, executive presence, and cross-cultural communication. These capabilities enable CFOs to build trust, influence strategic decisions, facilitate collaboration, and strengthen leadership effectiveness across complex global organizations. The Global Competency Framework recognizes communication, influencing, collaboration, leadership, strategic thinking, and business partnering as critical competencies for finance professionals. At executive levels, CFOs are expected to communicate complex business issues clearly, influence strategic stakeholders, facilitate enterprise-wide decision-making, and translate financial information into strategic actions that support organizational transformation and long-term value creation. In today's dynamic business environment, executive communication has become a strategic leadership capability rather than a presentation skill. Organizations whose finance leaders communicate with clarity, credibility, insight, and influence are better positioned to align stakeholders, execute strategy, navigate uncertainty, and create sustainable enterprise value through effective strategic partnering and collaborative leadership.